We're going to take a minute and just talk about loan mods and HUD partial claim deeds of trust. So if you find this video helpful, take a minute and like us. Don't forget to take a moment and join our YouTube channel as well. And if you have any comments, don't forget to comment below. We'll do our best to address those comments for you. So I just want to jump into a loan mod because we see so much of this today. And guys, in my career doing this business, loan mods really didn't exist until after 2008, 2009 when the crash hit. Heck, short sales really didn't exist. And all this new stuff came into play. Then over time, short sales have pretty much petered out since their height back in 2014, 15, 16, things like that along the way. There are still loan modifications, yet they're just not as prevalent as they used to be. Everybody was trying to correct the economy, try to fix things, trying to curb foreclosure and default rates that were just going nuts back after the real estate crash of that 08-09 period. Today, you can find and still find there are a lot of loan modifications that are happening where a borrower's in default, they need a little bit of help. Mortgage companies handle loan modifications many different ways. Some simply will do a direct loan modification, modify, renew, and extend the loan, and create a new payment and move forward. Other mortgage companies will take the arrears and they roll them into a second lien or a third lien, whatever the case might be. And then they secure that lien with what is called a HUD partial claim deed of trust. Now, of course, that's when you're dealing with the government through Fannie Mae, Freddie Mac, or some other entity that is being secured by the federal government out there. Oftentimes, there is a loan modification agreement that may or may not get recorded, as I have found. So you always want to talk to your seller out there. And when you're looking at your title commitment, you're looking at your abstract, you're doing your research online, and you see a HUD partial claim deed of trust, that light should go off in your head and you know automatically what that is. And that is, there has been a loan mod somewhere along the way. The borrower was in default. And by the way, guys, that's ammunition for us investors, because now if we're talking to that seller, guess what? They're in trouble again. They've been in trouble before. They need to find an exit strategy to this property. Maybe it allows us to have some negotiation ploy with them, some tactics that may help us acquire that home a little bit cheaper. Now, I just love these partial claim deeds of trust and whatnot because it technically is free money for the borrower. I wish I could get free money. They just won't give it to me. So if anybody out there wants to give me free money, you are welcome to send me a check. I prefer a money order or a wire. But these HUD partial claim deeds of trust are zero interest, zero payment loans. They take the arrears that the borrower has, whether it's for a few months, a year. I've seen up to 4, even 5 years of arrears rolled into a loan mod of some type. They put it into this note and deed of trust that becomes due at the same time that first lien mortgage comes due, either the same date that it had on it originally as its maturity date or as may have been modified through the loan modification. And then that sits out there accruing no interest, no payments are due until that loan is paid off, either through maturity and then it comes due or whenever the property is sold. What I find interesting is so many sellers forget they even have this out there because it's out of sight, out of mind. Yeah, they remember about that mortgage that they have because they're writing a check on it every month. But since they're not doing anything with this loan mod or these partial claim deeds of trust, they forget it's even there. So when we're talking to them about buying the property, they don't even bring it up. So again, that's why I say it's so important for us to know before we go, do your homework, do online, see what's out there. So when you're talking to them, if that doesn't come up, you're able to bring it up to them. And again, it's a tactic for negotiation when we're buying a homes. Now, these partial claim deeds of trust don't go away until the property is sold and paid off. Can they be foreclosed out? They can be if there's a foreclosure, which may not be a positive for the seller. Some mortgage companies will include a HUD partial claim deed of trust in a payoff. Some won't. So that might open the door to some tactical scenarios as well. So lots of options out there, but understand what this is. When you see that partial claim deed of trust, bing, automatically know loan mod occurred in some format along the way. 99.99% of the time, no payments. Get the terms of that loan mod. If you're looking at the original mortgage and you don't see the loan mod, there is a loan mod somewhere. That borrower should be either have it in their possession if it's not recorded of record, or they can get it from their lender. You need to make sure you look at that, know what the new terms, conditions are, interest rates, things of that nature that will help you navigate your transaction better as you're moving towards the purchase of that property or the post-purchase and navigation of that loan that you may have taken subject to. So guys, I hope you found that helpful about loan mods and about partial claim deeds of trust. If you did, take a minute and like the video. Don't forget to comment below, and don't forget to join the YouTube channel as well. And we'll see you guys next time.